Good afternoon. Welcome to the Platinum Group Metals session at our Green Energy Conference. Reminder to everyone that Platinum Group Metals is the premier development PGM asset in the world today, alongside a subsidiary, Lion Battery Technologies, that is aggressively developing a PGM-focused next-generation battery. Today with us from the company, Kris Begic and Frank Hallam, who are going to, I believe Kris is going to be presenting and Frank's going to be available for questions. Reminder to everybody, it's 15-minute presentation and time for questions at the end. And with that, I'll go on mute here and let Kris take it away.
Great, thanks Bruce, and thanks to Red Cloud for having us at the conference this year. I'm Kris Begic, VP Corporate Development, and I'm joined by Frank Hallam, who's a CFO, co-founder, and director of the company. So we're actually quite excited to be presenting at a clean energy conference, given that PGMs are the original clean energy technology, if one considers the traditional combustion engine. But we're also, as Bruce said, developing some very, very exciting technology around putting platinum and palladium inside a battery in various forms. Thus, we've entitled this presentation Innovation with PGMs. And just a general high-level summary, we have two businesses, the Waterberg project, which is the mine that we've discovered in South Africa. It's a polymetallic deposit, palladium dominant with platinum, gold, nickel, copper, rhodium. And it's a new type of deposit in South Africa. It's a thick, shallow ore body, which makes it amenable to safer, more modern mechanized mining with a much smaller labor force. And more recently, as I mentioned, we've invested in a research effort around putting these metals into a lithium battery. And we'll be advancing that research here quite quickly with our partner Anglo Platinum over the next couple of years. Just drilling down into both businesses, Waterberg, we discovered this in 2011. We've completed a full feasibility study, which was published in 2019. It's a large-scale deposit, just under 20 million ounces in reserves. We own just over 50% of the asset, and it's quite rare to have a palladium-dominant ore body in South Africa. Most of these mines tend to be platinum-dominated. And we've been quite busy with not only the engineering, but on the permitting side as well. We completed and announced the approval of our mining license and granting of our mining right by the government of South Africa in early 2021. And the joint venture partners are quite strong. We've got one of the largest producers in the world of PGMs, Impala Platinum, as a 15% owner, and a consortium of two Japanese groups who are also funding and contributing to the development of the project. On the Lion battery side, we've been investing now for a couple of years with research being done at Florida International University. And this is a joint effort between ourselves and Anglo American. And we're looking to create a market essentially for PGMs in batteries. And I think a lot of people will be amazed to learn about the kind of things that PGMs can actually do in a traditional lithium-ion battery. Quick overview on where these metals fit in terms of green transport today. As I mentioned, the 1970s ushered in the catalytic converter, and that's really been the key to automobile clean tech in gasoline, diesel. We're seeing hybrids, obviously, with a lot of uptake, and hybrid electrics. And I think the future for platinum in particular is around fuel cells, which and palladium as well will play a significant role. Won't get too much into this. This is the old technology. The catalytic converter is still very relevant and the biggest demand source for these metals today. Following the VW Dieselgate scandal, we've seen a tightening of emission standards all over the world. And palladium at $3,000 an ounce and rhodium at almost $30,000 an ounce are a reflection of the demand for these metals and the regulatory backdrop for internal combustion engines today. On the fuel cell side, there's been significant investment over the last few years. Platinum, I think, has been more of the focus given the applications to the fuel cell and the proton exchange membrane. Many car companies and energy companies, traditional energy companies, are devoting significant resources to developing markets around hydrogen and around fuel cells. And the conversion of water to hydrogen also involves the use of PGMs through the electrolysis process. And we think there will be growth in this part of the market slowly but surely over time. This is actually a chart from Matt Watson, who I believe was part of the conference this week, talking maybe more about traditional battery metals. But our view is that we're going to see demand for the traditional auto powertrains for a number of years still. The hybrid technology will bridge this move towards batteries over time. And the debate we're seeing is, how much mineral resources do we require in the form of battery metals to actually get us to a 30 or 40% adoption rate for battery electric vehicles. And you can see in that red line there, it shows you the terawatts of battery power that you're going to require, and certainly will be a challenge for some of these mines to deliver that metal. But the PGMs will continue to be needed for the traditional powertrains, gasoline, diesel, and hybrid. Turning to the project itself, it's in South Africa, in what's called the North Limb of the Bushveld Complex. There are a number of projects on this particular trend. The Anglo Mahalaquena mine has been in production for a number of years. It's the lowest cost, most profitable PGM mine in the world. Produces about 1 million ounces a year in an open pit mine. Ivanhoe's developing the Platreef project to the south. Similar characteristics to ours in terms of the thickness and the low cost and mechanized ability in terms of the deposit. And then Waterberg is the most recent discovery to the north along strike of this trend. And all of these deposits share similar characteristics in terms of their ability to be mined with a much lower labor force, and the fact that this concentrate can go into the existing downstream facilities in South Africa. The ownership structure, we're just over 50% in combination with our local Black Empowerment partner. Impala Platinum is a 15% owner. They acquired that stake a number of years ago for $30 million US, and they've been quite involved in the technical work around the feasibility study. They also acquired a right of first refusal on the concentrate offtake, and we're currently in the process of discussing this with Impala, along with some of the other smelter operators, both inside and outside of South Africa. And the Japanese consortium, consisting of the government of Japan through JOGMEC and Hanwha, have been very active, and they control the metal marketing rights once the mine's in production and producing physical metal. On the cost side, as I mentioned, the Mahalaquena mine in yellow there is the most profitable, lowest cost PGM mine in the world. We think Waterberg will be a very close second. And again, it all boils down to the mining method and the productivity that you get from being mechanized. And you can see on the far right in blue, the traditional, conventional, deep, narrow platinum deposits. And at these metal prices, they're making a very good return. But as we go through the commodity cycle, obviously it helps being on the lower end of the cost curve. The metal price environment for PGMs has been fabulous for the last few years. This shows you our metal split, 63% palladium, 29% platinum with a very good gold credit. And on a basket ounce, we've gone from just under $1,500 an ounce when we published our feasibility study. And today we're well over $2,500 an ounce. And on the bottom, you can see the projected cost to produce at $640. So we're looking at a 3-4x margin, which is quite rare in this business, and certainly makes the case for putting the mine into development. A few quick stats from the feasibility study. Again, this was published in late 2019 and was a joint effort on the joint venture's behalf. 20 million ounces, just under 20 million ounces in reserves. There is a large portfolio of ounces in measured and indicated, which have not been included in the mine plan. The mine life is 45 years, and we think it could actually go much longer if you look at those additional ounces. The run rate at steady state is projected at 420,000 ounces per year, with the majority of that being palladium. And at recent metal prices on the bottom there, we're using about $2,200 palladium. The NPV of the project, the value is over $2 billion, of which half of that would be our share. And I think the biggest question we're getting right now is the capital. And at about $600 million in projected CapEx, we've been spending most of our time working on a construction financing package. And we've got a number of different options we're looking at, including traditional bank debt, equity amongst the partners, royalties, streams. There's a whole bunch of different ideas that are on the table. And we're hoping that we'll be able to talk about that publicly in the latter half of this year. At these metal prices, we're sitting at about a 30% IRR plus. So while we've been working on permitting, we have done a bit of optimization work. This was actually funded by Impala, and we looked at things like tailings, some of the initial portal positioning. We did a battery electric vehicle study, which was quite eye-opening, and some work on the water situation on the ground. So that's been completed. The permit's been granted in February, and the key deliverables going forward are an offtake agreement and a funding package here that we're looking at being in a position to talk about between now and the end of the year. From a timeline point of view, this is a conceptual timeline, obviously dependent on financing. We are looking at a late 2021, early 2022 start to the declines. And once that commercial construction decision, formal construction decision has been made, you're looking at a 5-year construction period, with first concentrate being produced in 2025, 2026, and a full build out to 2027 with steady state production. So that kind of covers off the main asset. I mean, the company's market cap is roughly $300 million US, and I think the bulk of that value likely sits, at least in the market's perception, with the mining asset. We like to think of the battery investment as a bit of a wild card and comparable to a sort of an exploration effort on the mining side. But we're very excited about the things that we're seeing with Lion Battery. We formed this company with Anglo American jointly, and we're having the research done at FIU, Florida International University in Florida. And really the goal here is to put PGMs into various battery chemistries in various forms. And some of the early work that we've done has shown significant performance, both from an energy perspective and from a power to weight perspective. We all know what some of the bigger issues are around battery technology adoption. And I'm sure a lot of these issues were covered during the conference over the last couple of days. And the goal with the research we're doing with Lion is to really jump over some of these hurdles. So things like energy capacity, charge times, the cost of the battery, the life of the battery, and safety are all the things that we're focused on to be part of this bigger move into battery vehicles. And then when you look at where the existing battery chemistry sits relative to traditional combustion engines, we plotted the energy density here on the left-hand side, and you can see where current gasoline energy density gets you relative to where we are with NMC, NCA technology being used today. So we're certainly still lagging. Things are getting better slowly over time. And there's a lot of focus on lithium metal anodes. And we're focused on that kind of beyond lithium ion technology at lithium sulfur and lithium air, which are probably still 3 to 5 years away from being commercialized. The work is backed up by very strong academic research. The team at FIU has been at this for a number of years, even before we engage with them. And we have to date 3 patents granted. Actually, one of them we announced today. And we have 2 patents pending with a number of other plans in the pipeline for further patents. Without being too specific, and I know this is a bit cryptic, but On the right-hand side, you can see a schematic of a lithium sulfur battery. And the concept we're using here is to put PGMs inside a carbon nanotube separated from the chemical reaction that's occurring within the battery, and allowing the PGMs to play their role as a catalyst and to enhance the chemical reaction that occurs within the lithium sulfur battery. And we're getting some very, very good results based on some of the work we've been doing. And I think the key here, and I know this table is a little bit complicated, this is the last slide. The key here is that if you're going to put PGMs in a battery, obviously PGMs are rare and they're expensive. But the thing that people forget is we're actually planning to take out the bulk of the metal that's in an existing battery. So here you can see a Tesla battery has just under $12,000 worth of raw materials in the form of nickel, manganese, cobalt, aluminum, etc. If you strip that cost out and you add in $1,000 to $2,000 worth of PGMs, not only are you left with a much lighter battery, but you're actually saving money at the end of the day. So just to finish our share cap table, we're main board NYSE.A listed. We're at about a $300 million, $250 million market cap. We do have some debt on the books from a previous mine that we built, and we've been judiciously paying that debt down over the last couple of years. And we're backed by a number of significant shareholders. Hoskin Consolidated in South Africa is a 30% shareholder, with Franklin and Liberty also significant shareholders. And we were added to the TSX small cap index earlier last year. So I'll leave it there and open it up back to Bruce for questions.
Thanks, Kris. So the first one that we have here is, how will the disruption in South Africa affect operations in the mines there? Shouldn't Anglo look outside of South Africa?
Yeah, maybe I've got an answer to that. I'll let Frank maybe answer that question. He's been going down there more than I have over the years.
Sure. Well, of course, Anglo Platinum is the South African subsidiary or business unit for Anglo American, who of course do have international operations. But you have to take a look at the South African situation from a historical perspective. And you go back over 100, 120 years, they've seen all kinds of disruptions in the greater society or in the politics of the nation. And the mines always just motor away. The mines are an economic building block to the economy, and they generally find a way to continue to operate. So I think the people that run the mines for Anglo American and the other operators in South Africa will be cognizant and sensitive to these issues that are occurring at the present time in society, and they will manage their way through them. And at the same time, in their broader business units, continue to look outside of South Africa for opportunity.
Yeah, just a quick adjunct to that. I think if you look at the performance of the existing PGM operators in South Africa today, it's probably one of the best performing subsectors of the mining industry anywhere in the world. And if you look at the amount of cash that's been accrued and the amount of debt that's been paid down and the amount of dividends that have been paid out by Anglo, Impala, Sibanye, it's actually quite staggering. So I think people need to kind of look beyond some of the headlines that we're seeing around what's happening there and look at the businesses which are actually doing extremely well.
Okay. One other question that came on the line here is there any resolution regarding the entities that were opposing the mine, and how are you dealing with the matter?
Sure. Well, I mean, as we see in situations where new mines are being implemented around the world, not everybody's always in favor. And so there are some factions amongst the local community for their own reasons. Sometimes it's looking for some economic benefit personally, but they have their motivations. There are splinter groups or factions that have filed appeals in our circumstance against the grant of our mining right. So just to be clear, those appeals are filed with the Department of Mineral Resources and Energy. So those appeals are against the ministry or the department, not us. We are an interested and affected party, and hence we have a voice to be recorded against those appeals. The appeals are all very similar in nature. We don't think that they have merit. We've been through a very careful process of consultation and compliance with regulations with regard to the grant of our mining right. And our environmental authorization and mining right were granted against several years of work against that regulatory framework. So we have filed rebuttals to these appeals where necessary. In some instances, the Department of Mineral Resources has refused to see the appeals. So they aren't even dealing with them. They said you're out of time, or they're not filed in due form, and so we're not even dealing with them. In one instance, one group has filed in the High Court against the Department of the Environment for not giving condemnation to a late appeal. So that was an appeal against the grant of our environmental authorization back in November of last year. And in that instance, the department said, we're not even looking at it. So these things, we will deal with them. We have, a highly competent and skilled legal team. We're on extremely good footing. We spend a lot of time in consultation with the recognized leadership of these communities and farms. And it's our opinion that the broader communities are in support. We're working on Waterberg now. We went on site roughly a week ago to begin brush clearing, surveying, and preparations for geotechnical drilling. And we've had the support of the leadership and the community at large. So we'll continue to deal with these things in the appropriate manner. And our mining right is in good standing, and we'll continue forward.
Thanks, Frank. Thanks, Kris. Listen, we're out of time. Appreciate your guys' presentation today.
Thanks, Bruce, and thanks to Red Cloud and everyone attending today. It was great.
Thanks, everyone.